wait on a swing low to form, start a retest, and we're gonna try to get back in. Either EU or GU, whichever one comes first. Look how we just played off of that level right there. Y'all know what that level is? It's this old high right here. Damn, that's pretty, man. That's very pretty right there. I can't believe I didn't I can't believe I didn't see that. Today is Wednesday. CPI is tomorrow. I'm glad you called that out, bro. Ain't nothing today. I hate to see that. I hate to see that shit taken off without. I had the bias wrong this morning at first glance. That's the importance of looking at the DXY. Because I couldn't really tell by looking at Euro USD, but when I seen the DXY, it was clear to me what it was doing right here. We had this displacement and price came back down into it and reacted. That was beautiful. But at least we have our bias now. So now we just gotta wait on a solid pullback. We're gonna get it. Unless it just decides to drop and keep dropping, which I doubt it. All right, so it sucks that I wasn't able to catch this. I was buying when I should have been selling. Classic mistake. But if you secure the sale from yesterday on SPX, you should be in good condition. And GJ, I feel like this is a very high probability setup. I know I took this trade very nonchalantly, but I mean, when I see things like that, I just go for them because it just looks too good to pass up. So y'all should be in profit on GJ as well. And we just waiting. I'm gonna go ahead and split this up right here and throw GU up there, and we're gonna wait. We're gonna wait on these to come back to us. We just need to wait on a swing low to form. We have our dealing range. We have our bias. Everything's set up for us. We just need to wait. There's an area on EU to pay attention to, as well as this one, especially this one. But not all the time price comes back up in this far where we want it to, you know. Could definitely just pop back up and hit this equilibrium level. And then take off. Same thing here. Fair value gap there. And you have one here. So to be honest with you, I'll probably pull the trigger off of this one and stack another position if this one gets hit. That's just how you have to do it. Another way would pay attention to the 15-minute chart. Wait on a new 15-minute candle to open. We're going to get one in 2 minutes. And hope to get a new 15-minute candle that pops up into this fair value gap, which is plausible, but to be honest, I like watching the 5-minute. I don't really try to hold no weight on the 1-minute fair value gap. That's where shit gets a little too hectic, in my opinion. So I'm going to pay attention to our current dealing range, specifically the equilibrium level, not really worried about the kill zone levels. I just want price to get back up to equilibrium or above equilibrium. That's it. He said, is CPI not tomorrow, bro? Wednesday has nothing there. That's why I guess it kind of, I was too busy focusing right here instead of looking over here. My bad about that. Hope y'all having a good day so far. This is something that I don't want to see happen. Like price pop up into here and then keep rolling over. That would that would blow me. That would piss me off. But I've seen it happen too many times where it would be something like this. Like this would be considered your current dealing range. This is what I'm looking forward to though. Would be a more higher probability setup. But we are in the middle of the daily expansion. And this is something that fucks with a lot of people, and it gets them scared to pull the trigger. Because you're looking at this whole expansion here, but price moves in expansions and retests, right? So if you're in the middle of a daily expansion, New York session, and price is taking off, you need to pay close attention to these 1 minute swings, right? I've been talking about it all week. I think last week too, I was talking about it. These 1 minute price swings is what gets me in these daily expansions. It could be a gift and a curse, because you see how price just popped up into that level. If it takes off from here, I'm gonna be very disappointed, but I'm trying to remain conservative for you guys and not get y'all in a bad trade. But these things are risk. Like trading is risky and you're gonna lose some. It could very well react from here and take off, but I mean, thinking that can happen can be a mistake, right? Because if we're looking at this dealing range, but price is gonna retest this dealing range, we got a long way to go. Price is that's too far up to hold. But it wouldn't surprise me, real talk, if price reacts from this level. I'm not going in there though. We're gonna teach patience and we're gonna teach a high probability setup. But at the same time, I want to speak on these things and let y'all know how to identify them. Y'all get what I'm saying? Because this is a swing high right here. So this is a place where you will anchor your fib. Price is fractal, right? And this is an example of how you would get into a trending market, something that you feel like has already took off on you. And most educators will be like, well, it took off on us. Now we just got to wait for it to come back. And they're looking at like the higher time frames. Watch ICT and watch how he trades. All I do is mimic him. That's it. I mimic him. And you see how he's on these lower time frames all the time. If y'all follow his Twitter, then you can see live execution from him often. And every time you see a live execution from him, he's doing exactly I'm doing exactly what he does, right? You're using higher time frame points of interest, but lower time frame entries. And the key to it is to highlight a PD array, higher time frame PD array, and watch these candles paint on a 1 minute time frame as it trades up into that higher time frame PD array. That's the key to it. A perfect example of what I'm talking about is right here. So this is how we would treat this. This is a 1 hour fair value gap, and this is a 15-minute breaker. So let's drop down to a 1 minute, for example. You're going to look for the exact same shit, your rules, right? You want to see all that shit plan out. The same type of pattern you look for on a higher time frame, you want to see that shit happen. So I can count at least 3 entries so far, right? The first one's kind of ugly, but I see it. It popped out at me. right there. You see how the volume of the candles respected that gap? There goes one. There goes two. And this would probably be the most highest probability, being that we have this fair value gap coupled with this old high right here. All right, here's another one right here. Price traded down back into this level. There goes another one right there at New York Open. And then it kind of just took off. We were supposed to be in there, y'all. That's my mistake. But that's a perfect example of how you use it. This would have been ideal. I would have been all over that. My mind was still foggy. I woke up at 7:30, but like I said, my son is very congested. So we spent like 15, 20 minutes with him trying to get him decongested. Then I got on the charts and I didn't realize it until it was too late. But who feels like this short is gonna work? I feel like we could possibly get a deeper pullback because of the way prices is acting right now. We made this low. This turned into a bullish order block. Prices trading down into it right now and reacting. And that's what you want to see. Like bullish structure starting to form temporarily until it gets back up in here. SPX 500 is looking real good. GJ want to play. If GJ gets back up into this level, then I'll watch lower time frame price action to see if it's another opportunity to sell from. Yo, man, good job. Why not? You know what I mean? This is what I was telling somebody the other day. I was telling them I still paper trade to this day. Y'all see it every day. But the majority of the trades that I place on this account, I'm placing it on my live account as well. I found that helps me. I know I'm not the only one who's been through that period to where you feel like you find consistency on a demo account, but when you go live, you have trouble, right? So the way I found to combat that is to do both. That might not make sense for people, but it does to me. It works for me. I could treat my live account like a demo account, but with more caution, of course. The goal is to be emotionless towards your live account. You have to be emotionless. If you have emotions attached to it, you're going to be scared to lose. You're going to think twice about entering trades. I'm going to go ahead and place a sell limit at this 80 level, 1.00380, 385. I'm going to place a smaller position right here just to secure it. So if you usually place, I'm just going to throw an example out there. If you usually place one lot on a trade, on a high probability trade, then put a 0.25 or 0.50 on this. That's what I'm recommending. I'm doing that just to secure the trade because it is in a POI right now. Can still have your sell limit resting up here in case price decides to get up into that level. In GU, this looks high probability as well, but I'm not going to trade both of them. I'm going to stick with EU, but this looks good. Looking at GJ here, was that the perfect PO3 from Asia last night? Accumulation, manipulation, distribution. You're talking about a bearish PO3, right? Because that's what I'm seeing. This is classic, where you see that accumulation during Asian session. You see that manipulation occur right at London Open. And the manipulation is not just trading up into some random area. Your manipulation is going to be trading up into a PD array. 15-minute fair value gap is also a balanced price range. I'm realizing that right there. It's a balanced price range. It's a very specific level. And we cleared out buy-side liquidity. We have a series of equal highs right here. So that's a buy-side liquidity pool. Manipulation, to run out buy side liquidity, trade up into that BPR, displacement, London open kill zone, bearish breaker, displacement, and now we're trying to get in on the retest. So I think that this is a good area to place a risk at, but not a big risk, because there is a possibility that price could trade up into this one, dig up into this last down close candle, and play off of this blue line right here, which is an old low, I believe. But I'm still hoping for this fair value gap to hold. So when you're trading fair value gaps, you're not always going to find that. I mean, the majority of the time, you're going to be hit with situations like this, where you have a couple of them from a displacement down. So there's a couple different ways to combat that. All right, when we jump to the 15-minute time frame, that's really what made me go ahead and place a position right here, is this 15-minute fair value gap. But I do realize that we have another one right here, which is probably a more higher probability, but that's okay because I have a sell limit posted right there, just in case. But I've heard ICT say it before, like, you really want a fair value gap that is at or above equilibrium. This is technically at equilibrium. If you want to measure the bodies, no, that didn't give me what I was hoping. But anyway, like I was saying, when you have a couple different fair value gaps like this, you're stuck with the question and the problem with which one do I trade? And I see a lot of people, they want to trade that fair value gap that is coupled with an order block, which will look something like this probably, right? But how many times have you tried to trade off of this specific level and price reacts from the one below it, or price pops up and barely takes out the high of this candle right here, just to dig inside of that fair value gap a tad bit before running to your take profit? How many times has that happened? So the way that I combat that is to go ahead and lock a position in small enough to where it won't affect you if it does decide to trade up into here. And once you start, I mean, I know, all right, where's a logical place to put your stop loss? Right here. I'm going to put it up here, just like where I would put it if I were to enter here. So the risk reward might seem shitty, but it's only shitty for a small amount of time, because once you start to see this bearish structure form on the 1 minute, price trade up into it, and now it's developing this bearish structure and it's reacting from it. So we need a little bit more price action before we could drag this stop loss down here, and should be safe above this high. That was a good re-entry on SPX. We got a beautiful New York open kill zone trade right here. You can't beat that. That was a beautiful re-entry. So was this one. So I got 3 trades open and a sell limit. I have a sell on Euro USD, a sell on GJ, and a sell on SPX 500. So our target, no, I wasn't talking. So our target on SPX 500 is previous day's low, right? Now for people who want to really hold it, you see where I have this take profit, previous week's low. So those are 2 areas of liquidity that I feel like should be hit. This is the next draw on liquidity in my opinion, and this is why I'd be closing the trades at. So here's the trades on SPX. 38, 38, 75. That was the sell limit that I had. I entered this trade first, and then I placed the sell limit up here. And I wanted to set a take profit, right? Last night I thought I did, but I guess it didn't go through, or the broker didn't accept it. I don't know what happened. I was probably half dead when I said it, but you see these equal lows right here? I had it resting below there. That's what I thought I had anyway. But when I woke up, price was already back in here. And I was like, damn. But I wanted to take profit on this sell, the higher one, and close it down here because I would have been satisfied with that. But this is the Euro USD. You see, I market executed right here. 5-minute fair value gap. And I still have that sell limit sitting right there. And I feel like this is a logical area for the stop loss in case price wants a deeper retest, which is very possible. Yeah, like that's ballpark what I'm thinking on GJ2, but you know, everybody trades differently, man. Like I said, I'm gonna go ahead and place, matter of fact, I forgot to post that screenshot. I'm gonna go ahead and place a sell within this fair value gap just because, like, what happens if price runs and don't get up into there? Then you missed out and you're gonna be beating yourself up because it was literally a few pips away from your point of interest. But there's clearly a fair value gap there. So me personally, I would rather go ahead and place a small risk just to secure my position. And if price gets up into this level, you can stack another one. There's nothing wrong with stacking positions, especially if you're confident in your bias. Like, I'm confident that this thing is going to drop, and I'm confident that it's going to drop from here. I could be wrong. Like, a lot of the time we will see price have that displacement, make a high and trade down and run out that high before expanding. That's very likely to happen. But in the chances that it doesn't, I still have a position secured right there. I really like, see, this is a 5-minute chart. I really like how price traded up into their fair value gap and dropped down, failed to make a high, you know, drop down again. I like how it's developing that bearish structure on the 5-minute. That's why I felt safe enough to, you know, move my stop loss down from here to there. Looks like a possible re-entry on SPX. See this little 5-minute structure that's forming right here? We got this displacement, this pullback. We just displaced again and pull back again. You can literally get in here and bust this market's ass on a daily, you know? But you also need to learn patience and be selective with your trades. Like, when I say that you can find setups daily, I mean it. Like, I literally started on Monday, busted the market's ass on Monday and on yesterday. And hopefully we have a good day today. So that'll be 3 days in a row. And you got to anticipate a bad losing day. You got to anticipate it because it's inevitable. It's going to happen. You seen how quick I switched my bias on Euro USD this morning, right? See, sometimes we're all stubborn in our own way. You know what I mean? And let my wife tell it, I'm the most stubborn, but I changed my bias on Euro USD ASAP. But sometimes I won't be as quick to change my bias because I don't want to be wrong and I really feel like I'm right, you know? And that can result in significant losses. I closed this trade quick, like price was dropping and I realized that what it was doing, so I closed it. I could have been stubborn and stayed with this bullish bias, right? And I could be re-entering a buy right here because it kind of looks logical, don't it? It kind of looks logical, and it very well could happen. Like, I don't know, but I'm just going with what I feel, and it's been doing me good so far. I feel like we're gonna have a down close day. This thing's been acting bullish for a couple months now, but it's not gonna be bullish every week. And when we open up on Sunday, we develop this bullish structure, beautiful bullish structure, all the way up until Tuesday. This is what I call a significant high. We made a significant high on a Tuesday, and then we broke structure to the downside there in London with a big displacement. Right here in New York, we pulled back up and rebalanced that displacement. And then we displaced again. So now we're in the middle of entering this trade from that second displacement after that structure was broke. This is a very high probability sell, in my opinion, on GJ2. All the characteristics are showing me that it's going to be a bearish day. Now, keep in mind now, on GJ, we might not get this kind of move right now. Why? Because typically when you have a long range day during London, New York session will typically give you a consolidation. After a big expansion, price tends to go into a consolidation. That's my only worries about GJ. On Euro USD, on the other hand, we did have a nice expansion down, but it's not, look, you see the difference. There's a big difference between what you're seeing right now. Price dropped 70 pips in 30 minutes, and then it turned around and dropped like another 100 plus pips during London. So 180 pips total from London open until 5 o'clock. And 5 o'clock is the exact time that you expect to see price pulling back. This is the exact reason why I entered this trade. ICT talks about it all the time. If you watch the London Open kill zone trade, he teaches you how to maneuver and operate at London Open, right? And that's something that I really didn't get into. Like, I watched it and I understand it. I know how to operate there in London, but I operate better in New York. But what I'm saying is, this was your London Open kill zone opportunity right here. That's your London Open kill zone trade. Now, if you would have entered here, where are you going to take profit? ICT talks about this 5 o'clock hour, 5 to 6. This is typically when price will cap and start to pull back to present that New York session opportunity. Look right here, Euro USD. At 5:15, we made that low and started pulling back. Let's go to another pair. 5:15. All right, y'all, that sell limit just got activated. The sell limit is activated now on Euro USD. Your stop loss. I really don't want to see price violate the mean threshold of this order block. I don't even want to see price get up to the 50% area. You understand? I don't even want to see the order block get hit. This is a very conflicting day for me, not gonna lie, because I'm trying to stick to my guns, right? My trading rules, and I'm trying to think about the power of three of the weekly range, power of three. And what price is showing me is that we traded down and made this low on a Tuesday, and then we broke structure to the other side. We're developing this bullish structure going into New York today, right? But it's conflicting, obviously, because we are in this kill zone level from the displacement from yesterday. It's real. It's not often that you see price open up on Sunday and just immediately trade lower throughout the week. That it don't happen often. You understand? The majority of the time, I would say ICT talks about 70, 80% of the time, when price does this, there's a high probability that this is going to be your low of the week. And that's why my bias is what it is right now. And I'm going to stick with it. If it we're wrong, then we're wrong. Then we just got to reevaluate. And it's okay if we even fuck up today, right? I'm not saying we are, like, we're going to win these trades today. But if we don't, then tomorrow or later on today, we can regroup with a different perspective. Just like what I did this morning. I thought we was going to be dropping in here and going up. I realized that was a mistake, so I changed my bias. Biases are allowed to be changed. That's something that I had to learn the hard way. Yeah, Tom, you're exactly right. Tom said, I've come to realize lately that to be a good trader, you have to be able to change your bias on a dime. And that's an absolute fact, my friend. Jazzy said, it's now that you said biases are allowed to be changed that I'm thinking about it. I've never changed the bias. LOL, wow. Yeah, you're stubborn like I am. Ain't nothing wrong with that. Like, to take pride in being right, ain't nothing wrong with that, right? Because we work hard as fuck. Excuse my language, but if you're new here, I cuss, right? There ain't nothing wrong with taking pride in something that you bust your ass for. But sometimes pride is the devil. And pride has done caused me to blow a lot of accounts in the past. There's a lot of obstacles that you have to overcome as a trader, y'all. And I talk about it all the time. You have to face failure. You have to stare it right in the face. And you have to face that shit and you have to deal with it. It seems like every aspect of trading, I've had to fail several times, more than several. Every aspect, right? The risk, the amount of leverage, the lot sizes. I failed time and time again because I had that mentality that I wanted to like double my account in one trade in one day. Y'all see what I'm saying? It's that type of shit that will fuck you up. And challenges too. Thinking that you can pass a challenge in one day because it seems logical. It seems like it could happen because of what you have done on a demo account. I've done failed a lot of challenges, Rob. And ain't nothing wrong with that, man. You can't beat yourself up and let people make you feel like you're not a good trader because you failed. You're gonna fail. Ain't nobody exempt from that shit. Nobody. I think that's one of the Twitter. Yeah, I'm fairly new to Twitter myself. I joined Twitter this year when I realized ICT made his account public, right? I'm a student of ICT. I follow him closely, even to this day. Like I feel content and I feel like I have his strategy down pat, but I'll be a fool to think that I don't need him no more, right? So Twitter introduced me to Twitter traders, like the social media aspect of trading. And it's horrible, y'all. Y'all, some of y'all probably on there. Some of y'all probably know exactly what I'm talking about. It's horrible, bro. Like, it's amazing how many people have like turned their back on ICT. And it's amazing how so many people, can y'all imagine me with 12, 15, 20 people on a call trading ICT strategies, but claiming it to be something else, calling it something else? It's bullshit, right? You're supposed to respect ICT for what he's taught you. But a lot of these guys like FX21, he's trading the algo box from Vinny E-Mini, right? And he's literally using ICT strategies to go along with it. And you can clearly see fair value gap entries in his charts. It's just shit like that, man. You can't get caught up in it. So many people want to bash ICT students. And then you got a lot of ICT students who want to bash everything but ICT. Yeah, I believe the IML Academy had a huge role in, that stigma against Forex that you're talking about. that reputation, because so many people lied to get signups, jumping in strangers' inbox, direct messaging them, trying to sell them the dream that you can become financially free. Just pay this $230 a month, and you actually have a harmonic scanner, guys. You have a harmonic scanner, and as soon as you see this pattern play out, you're gonna enter at C and write it down to D. Like, shut up. You got these little signals over here that you can take. They literally never fucking work. Yeah, I got my ass handed to me trading the harmonic scanner. I promise you I did. And I remember my girl, she said, this motherfucker said, just do the opposite of what they're saying. Like, when the harmonic scanner tells you to sell, just buy. And I remember doing that and actually winning, y'all. Like, that's how bad it was. It was so bad. It was horrible, actually. And looking back on it, you know, you can just shake your head because we done came a long way. And for those of you who are new at trading Forex and you're here, bro, you have a huge advantage. I'm telling you. And that's one of the reasons why I started doing this shit, is because think about the advantage that people have when they get introduced to Forex and ICT at the same time. Beast mode, bro. You're gonna be successful quicker than the average person. You're gonna be more success. You're gonna be successful faster than I became successful and consistently profitable. You're gonna get there faster, I promise you. And people question the value that I can bring, right? All the time. I get it all the time. Why would I join you when I could just go learn ICT for free? I get that. I get it 100%. And by all means, I salute you. But people underestimate the value that I can bring. I dug through ICT's content, all of it, years and years worth of content. I dug through it. And I'm here to show you what you need. There's a lot of different shit. And ICT, the best trader I ever seen. But don't ever mistake this fact. He does have monetary motivation behind his content. You're lying if you don't believe that. ICT has a like money motivation behind his content. I learned YouTube content, but I always felt like there was something missing. And if you go through his YouTube content, he never mentions fair value gaps back in his old videos from 4 or 5 years ago, right? And that was the missing piece of the puzzle that I knew something was missing. I talked about it all the fucking time. I talked about it all the time back when I first learned his YouTube concepts. I was like, there's just something missing. I don't know what it is. There's something missing. And when I got into his mentorship, there was. He literally talks about it. He literally talked about it in 2021 mentorship, that he purposefully left out certain things on YouTube because they were strictly for his private mentorship. And it just blew me away. I was like, man, this fair value gap, that was the piece of the puzzle that we needed. The fair value gap, trading imbalances. It sounds so like, I don't know. I've been knew what an imbalance was for a long time. Ever since I first started trading, I've been knew what an imbalance was. But it was areas that I tried to target. You know what I'm saying? It was areas that I tried to target. So say this imbalance is right here and prices up here, I'm going to be trying to sell down into it. But we really be needing, this is a different example. Like, this is an example where we're trying to sell past it. But like here, for example, you want to buy at the imbalance. I don't know. It was just so simple, but so like one of them aha moments, you know? My reason for joining was simple. You ain't getting the personal touch from ICT, like these live examples. Yeah, it's true. I tried ICT once years ago, but stopped when I kept falling asleep. Sometimes I wish I had stuck to it. Damn, I bet you beat yourself up about that. Yeah, you gotta have dedication. The shit that you see on YouTube ain't nothing compared to the rants he used to go on in mentorship. All right, baby, this is what we wanted to see. It took about an hour and a half to get there, but we're starting to expand. Beautiful. If you took the sale limit that I had, you're golden. You're golden right now with literally 2 pip drawdown. GJ panning out, XP 800 panning out. 3 days in a row, baby. Let's get it. They sell limit literally activated with 2 pip drawdown, y'all. Now let's just get this expansion. We need a expansion, y'all. And I'm gonna let y'all know right now that I'm gonna take profit right here. Not take profit, but close a big portion of my positions. I want to target previous days low. If we can get down here below this opening price, if we can get down here below this opening gap, y'all, we're gonna take off. And we're gonna target this low. Because I don't know if y'all noticed or not, but once you get, like, here's the opening gap from last week, right? Once we get down below there, we took off, like, and didn't look back. This was high impact news driver. But this is one of those examples where we opened up on a Sunday and just traded all the way down to a Thursday. Those are hard weeks to trade. They're hard. Because if you was anticipating the low of the week to form right here, then you would have got burnt. You see what I'm saying? But it is what it is. That's why I want to be careful about where we at right now, because it does look like a good place to be looking for buyers at, don't it? It really does. But I just don't know if this specific day, this daily rate, I don't know if this specific day is going to be a bullish day. I just don't see it happening. Now, could this be a down close day just to retest this placement? Yeah, like that could definitely happen. We could use this one day to rebalance yesterday and retest it and go into a consolidation and then see an up close day tomorrow to get back above here. I don't know. But on the daily time frame, let's think about what we're seeing. We just had a very significant area get ran out. And we're bearish. You see what happened last time we ran out significant areas, right? Right here and right here. This one daily candle took out both of them significant highs, and then we literally dropped for a week. I don't know, man. We just gotta play it by ear, man. We gotta trade what we see. That's my target on SPX. Previous day's low, Dean, right here. That's where I would close the majority of my position. I close the partial on Euro USD. This is the low of that 1 hour fair value gap. So pay yourself, y'all. Please pay yourself. I really want to see this low get ran out though, not gonna lie. Is there a possibility that we could turn around here? Yes, there is. Do I want to see it happen? Fuck no. I don't. What does GU look like? Look at that shit, y'all. Look at the daily time frame on SPX, y'all. Because I know this was a beautiful area to sell from. I knew it last night. We overshot that fair value gap a little bit, but overall, look at the weekly. Price traded up, dug into this order block here, had a strong reaction. You drop down on a daily, you can really see it better. So from this swing high to this swing low, we got back above that equilibrium price level. We hit that 62% retracement level, reacted strongly from it. We spent 3 days pulling back to rebalance, redeliver price into this sell side imbalance, buy side inefficiency. And now we're trying to sell to get internal range liquidity, which is previous day's low. This is the next draw on liquidity from the daily time frame perspective. Internal range liquidity from the daily time frame perspective. This is a big area of sell side liquidity. That price could definitely eventually get back down into. Being that it's going into a new year, I feel like this low could potentially hold for the next 6 months to a year. And the same on Euro USD. I feel like this low is going to be this low of 2022. And I feel like we're about to go bullish. So if price can get back down into this level, that would be golden. Right? Hit that 62% retracement level. It lines up perfectly with the consequent encroachment of that fair value gap. But anywho, once partials are taken, do you move your stop loss to break even to preserve capital? Yes. It's definitely safe, in my opinion. You see this structure that is forming. You want to respect the structure, right? So if we get a pullback on the 5-minute chart, where's it going to come to? We get a pullback on the 15-minute chart, where's it going to come to, right? So at break even would be a logical area to put your stop loss on Euro USD, for example. On GJ, I would probably try to respect this last close candle. I want to say you could respect this fair value gap and move your stop loss in the break even. But what happens if price trades back up into this fair value gap and wants to completely close it in, which is a possibility, right? So I don't know, maybe break even on GJ, on SPS 500, definitely, especially if you took this trade last night and you were golden. If you took GJ London session low, would definitely close partials there. Look, y'all, today is Wednesday, right? We typically want to see Wednesday start that weekly expansion. So look what we got. We got accumulation, manipulation at the first couple of days of the week. And going into Wednesday, look what happened. It's starting that weekly expansion. This is what we wanted to catch. This is usually what we'll see on Wednesday during New York session. But don't forget what I said about GJ now. There's a very high possibility that we can go into a consolidation during this New York session because of what London did. I can't say the same for Euro USD. I feel like there's a very high possibility that we can get to previous day's low today. Unless I'm misreading it and it wants to react from here to trade higher. That's why I said close partials. If y'all took Euro USD, you should have closed partials right there where I told you to. Pay yourself. We really want to see price respect this area and keep trading down. That's what I really want to see. I mean, it is a logical area for price to react from. This 1 hour discount low, 1 hour fair value gap discount low. It's a logical area for it to react from, but I only want to see it react like this. I don't want to see it react with a huge push up and start to develop a bullish structure, because if it does, then we're gonna 100% change our bias. I don't know. I don't know if it's a good idea to move GJ to break even yet, y'all. And the reason I'm saying that is because, what is that, 15-minute fair? All right, yeah. This 15-minute fair value you got right here could definitely get revisited. But be prepared for it. If it doesn't, then you need to keep an eye on this 1 hour time frame. If price gets back up into this level, it doesn't invalidate the trade, right? Because you got to think of why you entered this trade to begin with. It's because of this 1 hour sell side imbalance. 15-minute, we got this fair value gap, and we got this one. So if price does take out this high and get up into here, then you need to be prepared for that. You got to think about everything like that. Managing trades are very important, y'all. Maybe a year and a half, 2 years ago, I was very, very good, just like I am now, at pulling the trigger and catching trades with little to zero drawdown. But back then, I had trouble with my management of trades. I had trouble with it. And that's something that I've really been working on. And I had to go back into old ICT videos and focus on that specific thing. And it clicked for me. You know, you got areas of liquidity. You got internal, external range liquidity, and you have to identify them properly. Like, for example, this London session low, that needs to be an area that you take profit from. I mean, close partials from. From here to here, there's nothing wrong with that, y'all. That is a beautiful game right there. I don't care what anybody tells you. Yeah, I know everybody wants to see them huge ass trade, like those trades where you enter here and you ride it all the way down to here. The reality of the situation is this, bro. Like, don't turn a good trade into a losing trade. There's nothing wrong with this setup right here. Let's just say you entered at New York Open. Stop loss above this high, right, this order block. What's wrong with that? if you would have closed partials at that low or maybe slightly below that low. There's nothing wrong with this, y'all. Don't let that risk reward ratio fool you. Because after price drops and find some bearish structure, you're gonna move that stop loss down, right? And then all of a sudden that risk to reward ratio changes. I mean, I understand the whole risk to reward ratio thing, but I just think it's a misconception. Like people who really think that they need very high risk to reward ratio trades to be profitable, I say, in my opinion, that you're looking at it wrong. Oh yeah, Tay. You was asking about the templates and stuff, right? I think you asked me to send you a screenshot of my templates and on how to do it. All right. So check this out. Just say like your rectangle, for example. When you click on it, I simply right click, and when I do, your template is the first thing you see. And this is, you can screenshot this. This is all my templates for my rectangle. When you want to make a new one, you just simply go to settings, type in, adjust your color, your font size, adjust your style. And then when you're done, adjust your text alignment. When you're done, go to template and go to save as. And you can put the template name in there and save it. So my trend line template, I already sent you a screenshot of that. Let's see. My horizontal ray template is kind of just like my trend line templates. Relative equal highs, relative equal lows, target, order block, buy side liquidity, sell side liquidity, previous day's low, previous day's high, fair value gap, that's pretty much it. Is the trend line, the horizontal ray, and the rectangle. Those are the main things that I use. And my fib, if y'all want to know what's up with my fib, I have two different fibs as far as the regular fibs. I got this one because I like the way it looks, and I copied it from ICT back in the day. This is how his fib looked a while back, some years back. But these are his exact same settings. We'll start from the bottom, the bottom of the fib 100%. The difference between this fib and this fib, this is more of a simple plain fib. It does not have the 79% retracement level because a lot of the times it's the level that I do not pay attention to. All right. This fib does have the 79% retracement level, 70.5, 62, and of course the equilibrium. And then you have your standard deviations, which is a very, very important thing to learn about. Your standard deviation is a measurement of your price, your current dealing range and what you're trading in. So, for example, this would be our current dealing range, right? From this swing high to this swing low, and price traded up and hit our sell limit. It was right there, close to that 62% retracement level. Now, a standard deviation from our entry, anywhere above this 50% level, would be at the swing low. So this is a logical area to close partials. From here to there is a trade in itself. And I don't care what nobody said. You can't convince me otherwise. It's trades like this that got me to where I'm at today. It's simply catching small price swings from here to there. Insane, right? But trust me, it works. And it will help you compound your account like nothing else. Anyway, back to what I was saying. This is your first standard deviation. Technically, it is. And then here, this is a negative 50% standard deviation. So it basically takes the equilibrium. You notice they're all the same size, right? So let me do this. From there to there is 13.8 pips. I don't understand why it's not even, but anyway. From there to there, 13.8 pips, 13.9. So 13.8 pips, the magic number, y'all. But nah, they're 13 point. I say 14 pips apart. So after every 14, 15 pips or so, you can pretty much anticipate price to react from these levels and possibly pull back. And they're good areas to close parcels at or to take profit all the way. I'll get into the other fields real quick. I just wanted to see something real quick. So as far as the template for my fibs goes, I just showed you two of them, which is the fib with the background and the 79% retracement level. And this one, it just simply has the most important fib levels in my opinion, right? These two blue levels, 62% and 70.5% in the equilibrium. And then you have your take profit levels. I used to have a fib to where it was just like this. It wasn't no take profit levels. It was just simply like that. I actually want to make a fib like that. All right, and then I have a fib with just the 50% level. Look, that's crazy, right? Literally to the pip. I'm going here and throw the price levels on there. 1.00407, and the high of this candle is 1.00407. Look at that random ass shit, y'all. That was so random. Damn, that's insane, dude. That right there, y'all, is the beauty of learning this shit. Is when you start to see like little small things like that. It really makes you appreciate it even more. But anyway, back to the regular scheduled programming. You have your Asian range fib, which I have talked about that. Exactly, algorithm, facts. I have talked about this Asian range fib before in the past. I don't know if y'all was a part of that discussion, but it's a lot to get into. It really is complicated to explain. I understand it 100% and I can display it for you, but sometimes I have trouble explaining it because can't nobody explain it like ICT can. You can basically use that a specific time window, right? We're not talking about a time window from here to here. It's a specific time window inside of Asian range that you can measure with this fib and then adjust those measurements slightly. And it will help you determine what the potential low of the day is for the following day, right? So just say price just got done with your time window and it's going into London session. You could, do your little thing with the Asian range measurements, and it will help you determine what the low of the day is going to be, right? And there's so many times where I've done this and the low of the day will look something like that. It's hardly ever this far down though, right? So it would typically be anywhere from a -1 standard deviation from the Asian range, -2, -3, something like that. See, I put these middle lines in here myself because I've realized that a lot of the times it's not just a -1, 2, or 3 or 4 standard deviation. A lot of the times it's to the pip 3.5 or 2.5. But anyway, and then I have the TGIF field, which essentially just has your 0%, your 100%, and 20 and 30. And y'all should know about that by now. Thank God it's Friday is what TGIF stands for. And it's basically a tool to help you determine if there is liquidity built up in this specific area from the high of the week down to the low of the week. So I just played an example from last week. Let's go on the hourly time frame. All right, so here's your high of the week, and here's your low of the week. And typically what you want to see, it played out beautifully last week, actually. Typically what you want to see is liquidity being built up around this 20 to 30% level. And clearly there is, right? If you can't see it, then I will help you. You got relative equal highs right here. You got another high right there. So here's a London open kill zone opportunity for your TGIF setup. And this was NFP, I believe. But you have another opportunity here. And the objective is to catch, well, let me put it like this. The low-hanging fruit would be the 20 and 30% levels. Yeah, I got this recorded, bro, and I will post it. I got you. Have a good day, Dean. So the low-hanging fruit of your TGIF setup is essentially the 20 to 30% levels. And you could, I mean, from there, that's a good trade. That's 46 pips. 46 pips. Look what just happened in EU. That's not too significant, bro. I'm just gonna take this stop loss and drag it up. Hopefully it just respects this order block right here. I'm not gonna let that scare me out the trade. Because it's still technically it can still come back up and bounce around this fair value gap. Really, sometimes moving your stop loss down to take profit, I mean to break even too soon could be a bad idea. Like it kind of makes me want to pull my stop loss back up to here and give this trade room to play out. But then again, it's just making me second guess the whole fucking situation. You know what I'm saying? Like, that's why I told y'all to take partials right here, just in case something like this happens. Because if this motherfucker is planning on staying bullish, this is where it's going to react from. That's unfortunate if that happens, but we can't do shit about it, but change our bias. So this looks like it could possibly be a displacement. If we start to develop bullish structure and that high gets ran and we pull back, we'll buy this motherfucker, bro. It's that simple. We're not gonna stay stuck on a bearish bias if it's not gonna be bearish when clearly we're bullish, right? I mean, I was right in the thinking that price is gonna trade lower today at New York Open, but I'm not naive to the fact that this is a logical area for price to react from. And that's why whoever took this trade should have closed partials when I said. And if you didn't, then you just have to work on that greed. Like, you have to work on that. All right, so here was our sell limit. From there to there is 25 pips. You should immediately be taking profit after 20, 30 pips, regardless of what it looks like. But let's just see what happens. Don't ever risk more than you can afford to lose, because shit happens, you know? Yeah, that's probably exactly what's gonna happen. Damn it, man. It's crazy, bro. All right, so EU sales are dead. That boy say I jumped in alone on GJ. I'm sorry, but I ain't convinced. I ain't convinced, bro. It would have to really violate this area right here. Really, this whole area from here to there. It would have to violate that first before I'm convinced that it's gonna keep dropping. And by then, if it does keep dropping, it will give me more confirmation to want to go long on EU. I realize I just got stopped out on that sale, but that's me displaying my stubbornness. So it just completely violated that. I don't know, bro. I don't want to speculate. You know what I'm saying? Because clearly, I mean, clearly I wasn't expecting that. Like, I mean, I kind of was like, I spoke on it a couple of times, and I told y'all to take parcels at this level, you know. And I said a couple of times that this looks like a good ass place to be buying from, but the fact that we traded up and made this high right here on a Tuesday led me to believe that this could potentially work out, but I was wrong. So all is well. Regardless, we made money on that trade, and we about to catch this fucking expansion higher since it wants to do that. That would have been a beast ass place to buy from, man. I'm about to find my way in a buy position, y'all. Yeah, it's moving like a news driver, and there ain't no fucking news going on. I thought it was just gonna be a slow, boring day of price just slowly moving down like this, but boy, was I wrong. I'm still not negative in on this EU trade though. Like, I'm still in profit. I had 2 positions on this bitch, bro. And I closed parcels on both positions right here. So I'm still in the positive, and y'all should be too. I'm about to buy right here. I just pressed the buy button, just letting y'all know. And this is what I want this trade to look like. I want to see it react from here, and I want to catch some of this expansion. All right, so I still got my GJ trade running, and I still got my SPS 500 trade running from yesterday. I've closed a nice portion of these trades. They look a little something like this. My last position was like right there. I closed parcels a couple times. Stop losses, securing profit. And we trying to adjust to what Euro USD is doing, because that was weird. I'm not gonna hold this trade long. If we can get back up above previous days high, I'll close it. Maybe slightly above it. I swear, that's almost the exact level that I wanted to see hit. Yeah, it's definitely in an odd area, man. You know, I came into the day wanting to see higher prices, but I switched it, understandably so. Like, we caught a good price swing regardless. We caught a good trade regardless. From the sell limit to where I told y'all to take parcels at is 25 pips. which is a solid trade. Man, DXY look like it's gonna go up, y'all. I'm telling you, bro. This looks like a purge of sell side liquidity. You know, we trade down to a fair value gap, we expand, we come back down, take out that low to dig down to the fair value gap again. There's too many times that I've seen this play out. Like, so for example, from the two trades that I had right here, where I closed parcels at, I made a little over 1,200. I sold again and got stopped out and lost 130. So I'm still good. This should be something similar to what y'all's trade on Euro USD look like, minus this, because I'm sure y'all didn't sell again like an idiot like I did. Even if your stop loss would have got hit, if you would have left your stop loss up here and not at break even, you still should be in profit from the partials that you closed down here. All right, y'all, look, I'm about to hop off of here, and in about an hour and a half at London close, I'm gonna revisit to see if London close will give us a setup. I'm wanting to see price respect this fair value gap and trade higher, because clearly this is a displacement from a logical area. Price filled in the whole buy side imbalance, and now it's bounced off of this level, displaced higher. So maybe we jumping the gun on, maybe I'm jumping the gun on this entry. We could wait until a fair value gap is formed here, for example, like this. Like, let this candle close and let's see if price can create a fair value gap so we can hop in this trade to make it look something like this. I'll keep y'all updated, man. But in the meantime, we still looking good on GJ and SPX 500. I already closed the majority of my position on SPX 500 and GJ because of what we're seeing on DXY and Euro USD. These will typically follow right behind. So just be aware of that. Peace out, y'all.